Hi guys, good morning everyone. And today we are going to discuss about trade finance, how the LC is issued within the departments of the bank or within the financial institution departments. So uh, I will try to give you a brief introduction about how the LC cycle works, and I have included some internal departments also so that you will be very clear about how at each stage how the LC flows and how the LC application flows and how the LC is being issued within the departments and when it reaches the seller and how they prepare the documents and how they deliver the goods. So I will try to explain using this simple slide itself, and in case if you have more comments, I will try to address those comments, and I will try to get genuine feedback of my training session so that I can improve continuously. So let's begin this. See, normally, as a trade finance guys, you will know that there will be an agreement between the buyer and the seller. They have some contractual obligations. So the contractual obligations, the contracts, basically it will mention everything: who will bear the charges, what type of goods need to be shipped, and when it has to be shipped, what is the timeline within which the buyer should receive the goods, and how the goods will be what is the mode of transportation that is to be used, whether it will be an air shipment, whether it's a land shipment or land transportation basically, or an ocean voyage shipment, and whether transshipment need to be there, whether partial shipment is allowed or not. So all those terms and conditions will be decided based on the agreement or arrangement between the buyer and the seller. So buyer, once those things are confirmed, so that agreement or the contract can happen through the communication, through any communication channels. Basically there could be just a phone call, or there could be some email exchange between the buyer and the seller. So when I say buyer and seller, they are basically the companies. It can be a SME company, or it can be a large corporate institutions. So and where does this LC comes into the picture? When they don't, when there is less trust in the market, and when they require the specific type of goods, and they don't want to compromise any kind of deviation in the goods, the letter of credit terms and conditions will play a major role in the shipment of the goods. So that is why, though it is basically kind of um, bit expensive trade, then also the large institutions or the companies will try to do trading activities based on the letter of credit, because the letter of credit is in the writing form, and it mentions all the terms and conditions, what are the document requires, when the shipment is going to happen, and what are the conditions that needs to be met, how the payment is going to happen, who is the party that is involved in the letter of credit, and what is the payment, how the payment will be made, whether it's going to be a mixed payment, or whether it's going to be site payment or deferred payment, how the or the whether there's going to be an acceptance of draft. So all those terms and conditions will be decided by the buyer and the seller. And there are two things which is involved in trade finance activities. One is how the risk will be covered, and who will bear the cost and at what stage. So there could be a sharing cost between buyer and a seller, or one person can can bear the cost. So it is totally based on between the buyer and seller agreement basically. So let's begin our introduction with the buyer. So the buyer, normally, when everything is been decided, they will they will get the LC application from the issuing bank, and issuing bank, based on the terms and conditions what is being written in the LC application, the front end department of the bank will verify the signature, and will verify the correctness of the LC application, whether all the details are mentioned, and of course he should have some kind of knowledge of uniform customs and practices, ISBP, so that whatever has been stated in the LC terms and conditions, whether it meets the requirement, and whether the original LC can be issued to the beneficiary bank and to the for onward forwarding to the beneficiary. So the front end department will verify the signature, and once they are convinced, they will send this to the trade approval team. The trade approval team, basically, they will work in conjunction with the credit department of the bank. So the credit department, normally what they do is they will assign the facility letters to the buyers. The buyer, so if there is a LC facility, or if there is an interchangeability between bank guarantees and LC facility. So some LC facility need to be available, so that the trade approval team can block those that limit, including the charges and whatever, like 10% or 15% more than the 100% coverage. Or if there is no facility, then basically the buyer need to have some kind of lien. So if any fixed deposits are maintained with the bank, they will block the fixed deposit and they will issue the LC, or they will provide 100% cash cover or 110% cash cover. They will deposit some funds to the bank account, and those funds will be blocked, and beneficiary cannot withdraw the buyer cannot withdraw the funds until the full life cycle of the LC is completed, right? Or so that will depend totally upon the agreement between the issuing bank and the buyer. So basically, if they have the facility, they will block the facility and they will issue the LC. So once they approve, the LC application will go to the trade operations team. So just for our convenience sake, I have mentioned this issuing bank as Bank A and beneficiary bank as Bank B. And if there is any reimbursement bank is involved, then it's a Bank C, and then Bank D. Bank D is subjective; it's an optional. So sometimes the beneficiary bank can be an advising bank itself, and then they will directly issue the LC to seller. There will not be any beneficiary bank. But for our convenience sake, I have just mentioned the beneficiary bank as Bank D. So once the trade operations, once the LC application receives to the trade operation team, they will have maker checker. So maker checker also will be here. So in trade approval also there will be a maker checker. In trade operations also there will be a maker checker. So the one person will enter all the details, and the checker will verify the details. So once the LC is issued in a SWIFT, then it goes and it reaches the advising or negotiating or confirming bank, which is Bank B. So Bank B will check the authenticity of the LC, and once all the details are read, then and if they are convinced, then it is very subjective. They may or may not advise, but if everything is fine, then they will advise the LC to the seller. So seller's job is basically to see here. They may advise directly to seller, or advising bank can further nominate a reimbursing bank if they are going to be a confirming bank. Then if there is any other bank with which the seller is maintaining an account, they will based on the seller's request, they will route the LC through Bank B, which is Bank D, right? So it is purely dependent upon the seller's instructions also. So once this LC is issued to the seller, seller's job is to uh, uh, read the all the terms and conditions of the LC, all the details, and once they are convinced, they will start preparing the documents, and they will ship the goods to the buyer. So the shipment can be either air shipment, or a land transportation, or it can be a ocean vessel shipment, right? So all those, depending upon the terms and condition of the LC, the shipment will happen. Will They will ship the goods and then they will submit the documents to the beneficiary bank or to the advising bank. Advising bank will check the documents. If everything is complied with the LC terms, then they will forward the documents to the LC issuing bank. Once the LC issuing bank remit funds to the advising bank will pay to the seller or to a beneficiary. So if it is a confirming bank and if they are going to discount, then that's another scenario. So negotiating bank or confirming bank, if they want to pay in advance or if they want to discount the LC, it is purely dependent on that. But LC need to be confirmed if they wanted to confirm the LC and do the discounting. So it's purely on the LC terms and condition. Now here the business development role is basically to increase revenue and get more and more clients. So they will be dealing with both the buyer and seller, right? So maybe they will be involving in different products, but they will be dealing with both buyer and seller. FIs will come into the picture where they will have direct relationship with banks, with the various banks, with various correspondent banks, so that LCs can be routed in a proper way, and there is no issue in establishing the authenticity and LC swift relationship with the banks. Hope this session was useful to you. And this is a very simple slide, and there are a lot of other complex issues that is involved, and that cannot be explained in one slide. But I will try to cover more advanced trade related topics in the coming days. So thank you so much, guys. Thank you, and I hope that the youngsters will try to attend my training sessions, and they will try to gain some knowledge out of it. Thank you so much. Thank you.